We are looking at the series of time frames for the British pound US dollar. The first thing we're going to do is look at the daily chart. And no, the first thing we're going to do is we're going to look at the weekly chart. This is how to trade MACD divergence, or this is how to use MACD divergence as a tool in your trading. I realize that many of you may not have studied Fibonacci yet, but we're going to give you a quick little preview. All you need to understand is this. This high right here, the market swings down from the high of a price swing to the low of a price swing, 2,000 pips plus 2,500 pips. Price retraces 2,000 pips to, you see this red line here? This is the 79% retracement of this downswing. But all I need you to understand is this, is that this line right here delineates the, it is 190, the figure. It is also the support resistance through this pennant, and it is also the rough equivalent to the left shoulder of a Head and Shoulders. Price here is making a go at 190, and as price was moving up towards 190, I was screaming at the top of my lungs to Pro Traders Club members to sell 190 because, first of all, because of the parabolic 1,500 pip run and the sensitivity of the market to the 79% retracement. MACD on the weekly is moving up. Let's move down to some lower time frames. This is what it would look like on our daily chart. Just to give you an idea, this is what our 190 looks like on a daily chart at the time. Let's move down to a 60-minute chart. Knowing that we are at a key level at 190, so when we go to our 60-minute chart, we know that this 190 level here is a very, very, very important level. MACD is rallying here as we test the level at 190 once, twice. Each of these in and of itself was a trade. And then it retraces and it moves up. The MACD moves down toward the neutral line and below. Now it starts making higher highs and higher lows. Price spikes through 190, the 190.36. And we see that the MACD is now in a state of divergence on the 1-hour chart. We see the MACD in a state of divergence on the 1-hour chart. Price made an attempt to go higher. Now we're looking at a multitude of factors. We're looking at price testing this significant high as defined by the large time frame, which is very powerful. Price is rallying and rejecting that level once again. MACD is in a state of divergence. Price is trading below 190 or below the previous highs. As a result of these combination of factors, we would expect that price will fall at this stage. Now we get a fall. You want to take your first profit early. It falls 200 pips immediately. Let's look at the 15-minute time frame now. Here's our 190 level on the 15-minute time frame. Here's our retest, but look at the high over here at the first test of the 190 level. You see our high right here? That is our first test of the 190 level. Now we're in a state of divergence. Price spikes through. This was actually an economic report that caused the spike through the 190 level. It was immediately rejected, and the MACD was in a state of divergence, further confirming how important this 190 level is. And if price trades and holds below the 190 level here, then again we are likely to see a potentially significant down move. We have our uptrend line, which could act as a minor confirmation should price move below the trend line, as it does here. To give you a closer look, here's the test at 190. MACD is in a state of divergence, referenced from the earlier point. We reject at 190, we move below 189.60 and below the trend line at 189.40, confirming a potential downturn. Again, I was screaming for traders to trade this short because it was just a real technically friendly move that was strongly suggestive what the sentiment of the market was at the time. So we see a very nice down move as a result. Let's go to the daily chart again to see what kind of a down move we experienced on this trade. Here's our 190. Price went from 190 to 184 and 182. It's gone from 190 to 182 for 800 pips. That, traders, is how you get into a position trade. And once you start to learn the other tools in this course, then combined, there is no reason, there are no excuses for not getting into some of these long-term trades. It's just a question of combining the factors, understanding the market, and applying the tools effectively in the right market environment.